Good evening and welcome to the Financial Report. It was another bloodbath on the Hong Kong and mainland markets today, sparked by Beijing's sweeping regulatory overhaul. Bunchnea reports.
Investors in some of China's most vibrant sectors, from technology to education, found themselves in the crosshairs of Beijing's attempts to rein in companies it blames for exacerbating inequality, increasing risk, and challenging the government's authority. Tencent slumped 9% after the company's music arm gave up exclusive streaming rights and was fined. Meituan plunged almost 18% as investors digest new rules on online food platforms. The Hang Seng Index closed 4.2% lower at 25,086.
The market momentum is getting worse since investors worry about policy risks on different sectors, like technology and education sector. If a Hang Seng Index cannot stand above the level of around 25,500 points, it is in the short term, it is possible to test around 24,000 points.
The Shanghai Composite dropped 2.5% to 3,381. Bunchnea, TVB News.
And let's take a look at the 10 most actives. Most tech titans closed in shambles today. The only outlier of the day was chipmaker SMIC, which swung to profit for a second straight session. It rallied $1.50 or 5% to its one-month high at $25.55. Wuxi Bio and NetEase both continued its losing streak with a plunge of 7% and 4% respectively. Hang Seng China Enterprises indexes, meanwhile, slipped to its 52-week low after shedding $4. China Evergrande surprisingly decided it will not declare a special dividend. It comes less than 2 weeks after flagging it to investors, boosting its stock price. The world's most indebted developer has been trying to convince bond and stockholders it has the ammunition to make good on its borrowings. Late yesterday, S&P Global Rating cut its credit rating of Evergrande, the third downgrade by ratings agencies in about a month. Its shares closed down 13.4%. The U.S. Securities and Exchange Commission says Chinese companies listed on U.S. stock exchanges must disclose risks of the Chinese government interfering in their businesses as part of regular reporting obligations. Some SEC policymakers worry that Chinese firms are flouting U.S. rules, which require companies to disclose to investors a range of potential risks to their businesses. Those are the first comments from the SEC since Chinese regulators launched a massive probe into ride-hailing giant Didi Global earlier this month. That came just days after Didi's $4.4 billion New York listing, and it wiped 25% off the stock price. Didi claims it had no prior knowledge of the investigation. Over to the forex market, Hong Kong dollar exchange rate is trading at 7.78 against the US dollar, British pound 10.74, and euro 9.18. And that's a financial report. Thank you for watching.